2015 marked another year of relative resilience for industrial properties in both the warehouse distribution and flex R&D subsectors, though property types really weren't immune to the kind of economic headwinds that a lot of U.S. firms experienced during the year. Warehouse and distribution national vacancies ended the year at 10.6%, down 60 basis points for the year. Flex and R&D vacancy rates ended the year at 11.8%, down 100 basis points for the year. Other property types like office, apartment, and even retail would be pretty envious of those vacancy drops for the year, indicating that there's still strong demand for industrial property types and industrial space. However, rents for asking an effective side for warehouse and distribution rose by 1.8 and 2.6% for the year. That's slightly less than 2014's rent growth. And for flex and R&D, it really only rose by 1.9% for 2015 for effective rents, whereas it rose by around 2.3% in 2014. So you see a little bit of that throttling back in terms of rent growth, even though demand still was pretty strong enough to bring vacancy rates down. What's happening right now is that if you take a look at the job growth numbers, well, the average job growth of 2015 was 220,000 per month. That's down from 260,000 per month in 2014. And there certainly were a lot of headwinds like low oil prices that really dampened both industrial production and corporate profits, dragged down by a lot of mining and oil companies that were bleeding during the course of the year. What's going to happen for 2016 is that we're cautiously optimistic about what's going to happen. We believe that the U.S. is strong enough to withstand the kind of economic headwinds that non-domestic risks are pushing against it, but the risks of a downturn really are certainly higher than 2015 or so, and we shall see what happens to the industrial sector at the end of this coming year.